from where you sit.
Welcome to another episode of The Trading Bell. My name is Maalika, Kazia, and this week we feature the Deputy Managing Director for the Ghana Stock Exchange, and that is Mr. Ekow Afedzie. Of course, he's going to be talking to us about a lot of factors surrounding the GSE as well as other general components around the African market. But for now, take a look at his profile. Ekow Afedzie is currently the Deputy Managing Director of the Ghana Stock Exchange. He was educated at the University of Ghana, Legon, Ghana, where he obtained a master's degree in business administration and a Master of Arts degree in economic policy management. He also holds a bachelor's degree in law from Mount Crest University College. Mr. Afedzie is a member of the Chartered Institute of Marketing, Ghana. He joined the Ghana Stock Exchange in 1990 when it was established and has served as the head of marketing, research and systems, then the general manager before becoming the deputy managing director of the exchange. He serves on the board of the Central Securities Depository Ghana Limited as well as a member of the Ghana Alternative Market Governing Committee. He is also a member of the board of the Ghana Investment and Securities Institute Limited. Ekow Afedzie is a member of the Management Committee of the Business School of the University of Ghana, the Governing Committee of Ghana Fixed Income Market, and also that of the Governing Council of the Ghana Securities Industry Association. Thank you so much for joining us, and it's a pleasure to have you with us here in Nairobi. First of all, how is the stay going this time around? How are you liking Nairobi?
It's quite exciting. I've been here for the past 5 years. I see a lot of development. And that's good. And if that can be turned into people having a lot of savings so that they can invest, so the capital markets can grow.
Okay, fantastic. So, if we talk about the GSE now and the fact that you did begin the whole trading in 1990, and we've seen it grow over the years, of course, but over the past decade, what are some of the milestones that you yourself have noticed, have achieved, and think that, these are things that we have definitely seen as good and big positive steps towards progressing to building the GSE even to greater heights?
Yes, you're right. We started trading in 1990, so we are just about getting to 29 years. In the past 10 years, we've achieved quite some great things. Let me start by saying 2 times within the past 11 years, we've won the Best Innovative Stock Exchange in Africa at the African Investor Awards. So that tells you that we take technology very seriously. So that's the first thing I'll talk about. We automated our trading systems way back in 2008, that's 2008. We came out with a depository system, and then we also had a client settlement system. Quite innovative in the sense that as an exchange, we had a seamless flow of transactions from the trading system to the client settlement system real time, and also ending up in the depository, all seamless without manual interventions. That's what we did about 10 years ago. We have gone on further to upgrade the systems. We've added a lot more. We now have a Bloomberg e-platform for trading bonds on the market. We've linked that to also the Central Securities Depository. Along the line, we merged 2 depositories, unlike the ones you have in Kenya. We merged the one that was for government bonds and the one for equity. So we have one Central Securities Depository in Ghana, handling all the securities that are tradable and can be put in a custody in the depositories. So that is the second great achievement, automation. We went on, introduce or merge the depositories and had one single depository. So it allows investors to go to the depository and ask for their statement, and they'll get all their investments in the country in terms of the tradable securities. Okay. Shares, bonds, government bonds, corporate bonds, all together, one sheet of paper or electronic form. Along the line, what we have also done is to create 3 markets. We have the main equity market, which is dealing with the big companies in terms of issuance of shares, ETFs, that's exchange traded funds, and other equivalent securities on the main board. Then we created what we call the Ghana Alternative Market. That market is meant for small and medium-sized companies, as well as companies that have growth potential, and also new companies that are beginning to start, that is startup companies. And the unique thing about this setup is that we set up a fund called Listing Support Fund. And that fund is used to support companies that intend to raise capital to enable them pay the cost of advisory work. So they take the money and pay their sponsors or brokers, pay their accountants or lawyers who will be handling the offer for them. That's quite an innovative thing that we did. Then also we created incentives. They virtually don't pay any fees to get onto our market, both at the regulatory level, that is at the stock exchange level, and also the Securities and Exchange level. Then also, the other thing that we did in order to make offers successful is to make it mandatory for brokers who sponsor these companies to underwrite the minimum offer.
Okay.
So right from the word go, the offer is successful. But we've attracted only 5. So we still have a lot of work to do in order to attract more companies to get onto this market. Then the third one, which is the market for the future, is the bond market. We created what we called the Ghana Fixed Income Market. We did that together with the Central Bank, the Association of Bankers, the dealers, brokers, etc. So it's a market that has been established for second trading of all debt instruments, government bonds, corporate bonds, municipal bonds, etc. So that is what that market is meant for. The unique thing about this market is that because we set up the market with other stakeholders, it has a separate governance system or structure. So that we have a governing committee, and that governing committee is chaired by the first deputy governor. Then we have the managing directors or key stakeholders, as well as the head of financial markets of the central bank on this market.
Sure.
I say it's a new market that's going to push us into the future because I've noticed throughout my 28 years of being in the market that Africans like debt instruments. They like to know what they're getting when they're investing. So he's buying a bond, a 2-year bond, and the bond will say you'll be paid 10% per annum or 15% per annum. They don't like to take the risk in investing in equities, which over a long period can give you maybe better returns. So we've realized that turnover for the bond market has been increasing gradually since we set it up 3 years ago, to the extent that in 2018, the turnover was about 37 billion Ghana cedis. If you convert it, that's equivalent to about $6 billion traded. The year before was about 5 billion. So it's growing. And we intend to create more instruments and improve liquidity on that market as we go forward. So these are a few of the key things that we've done on the market. Creating 3 markets, making sure you're using technology to do everything that we do on the market. Brokers can give access to their clients all over the world. You can stay in New York, London, and once you have access to the broker's back office system, you can place your orders from any of these countries, and your order will hit the trading engine.
So there's been a lot of development, the way, as you've mentioned, from the markets to the technology incorporation and more. But even as you talk about the GSE, you know, we've got the NSE, we've got SafeX in South Africa, and all of these different exchanges across the continent. What do you think can be done for them to better support one another?
The challenges across Africa or emerging markets generally are about the same. Poor liquidity, low turnovers, then also low number of listings. These are 2 key major issues. The technological aspect is being cured or is being resolved. So how do we get the markets to be more liquid how do we get more companies to be traded on the market so that these markets can contribute significantly to the development of our economies? And that is what we should be aiming at. How do we contribute to the development of our countries? So when you take the first one, more listings, we need to keep on educating our entrepreneurs about the fact that it's better to use long-term funds for long-term projects than to go to the bank and take short-term.
The loans.
The loans of 2 years, 3 years. That has led to the failure of so many of these companies. They don't like equity because our culture for equity investment is so low. We don't have the culture of ownership, of sharing. So that is a major issue. Everybody wants to own his own company. Wants to own 100% of a $1 million company, not to own 10% of a $100 billion company. They believe in quantity than value. We need to change that mentality. So education, very important. Then maybe we need to create incentives to attract them onto our markets. Some markets have tried to use tax incentives. Others have tried to use things like cutting down the procedures, because they'll tell you that it's too long to go and raise capital. He goes to the bank in a week, he can get money. If he goes through the capital market, it's going to take him months in order to be able to raise money. And so we need to cut down the procedure, then also make the requirements so flexible, so we can have these companies coming to the market without losing the issue of disclosures. We need to make sure that they are transparent and they will disclose every material information that will affect investors. So that's the one. Governments can also help. Governments can help by creating an enabling environment for companies to be able to grow and also have the opportunity to access long-term capital. When you look at it generally, companies can only raise capital when we have investable funds around, whether institutional or individuals. So if you don't have the economy doing well, it's going to be difficult for companies to be able to go raising capital.
True.
Of course, you can attract foreign investors, but they're also looking at what is happening to the economy. So we need to tackle it from the economic level. We need to look at government creating incentives. We've had a history of government owning so many huge companies. Can they allow some of them to become more efficient and transparent in their dealings by offering part of the ownership to the public? We've seen some countries doing that. So there's so many things that we can do. Promote institutional investors, pension funds regime, so that they can have the demand side strengthened, supply side also strengthened. So these are some of the things I believe that we can do.
Okay, very, very insightful there. And you know, one of the other sorts of areas within markets that is interestingly being explored is the derivatives market. And you know, how do you think that will play out within the general scheme of things on the African exchanges?
See, I'm smiling.
Yeah, I do.
I look at it differently. We need to create more products and allow various types or categories of institutional investors and individuals to have an area of investments in order to invest. So we can have the ordinary shares, which most of us are doing, normal vanilla bonds. Then we can create the derivatives market for those sophisticated investors who want to hedge against futuristic things, etc. So there's no problem trying to create derivatives markets, but it's more complex. It's more complex than the ordinary ones. I know Kenya is trying to do that. We are thinking of doing that also in the near future. I think Nigeria, South Africa is well developed, so they do have that already. So it's something that I will encourage. We need to create more products so that we can get an area of investable products where investors can spread their investments.
Okay, and finally, even as we close up, what do you think are some of the key things that we can do in order to increase investor education? As you've said, you know, diversifying products, a lot of things that investors need to know more about, and especially those, the entrepreneurs who can take advantage of this. So what would you say is the basic first step in increasing investor education when it comes to trading, and for them to learn that this is something that perhaps is beneficial for them?
There are many steps we need to take at the same time. I say so because we can group the various stakeholders into various categories. We need to start from policymakers, for instance.
Okay.
Do they understand the contribution of capital markets to the development of economies? We sit here, we talk about US, New York, talk about London, etc. Do African countries, Kenya, Ghana, Nigeria, do we understand the role capital markets can play in development? So we need to educate policymakers. We need to also educate potential issuers, entrepreneurs, like you said. We need to educate those who have the funds to invest, pension funds, other institutional investors, individuals. So we need to also educate them about the fact that it's important to invest in these long-term instruments, because without investing in long-term instruments, our countries will never develop. We cannot rely on short-term investments to develop our country. So it's important to do that.
Okay.
Then for the future, we need to get down to the student level.
True.
Let students begin to understand, right from high schools, universities, that it's good to invest, and you can invest for your future. If you want to become an entrepreneur, it's good to look at raising money through the capital market.
So you start younger and you go even lower down the level,
Exactly.
as well as the policymakers.
Exactly.
Okay, thank you so much for speaking to us today on the Trading Bell and for all your insights.
It's a pleasure.
Well, that was Ekow Afedzie, the Deputy Managing Director of the Ghana Stock Exchange, speaking to us on the Trading Bell, of course, sharing so many insights with regards to not just the GSE, but in general, the African exchanges and the situation across the continent as well. Time now, though, for our market analysis.
There was a delay. Normally, banks will announce early February, mid-February. Now we're seeing them announce very close to the deadline. They're really
Later,
cutting
yes.
it close. I mean, Equity has yet to announce, apart from KCB and Barclays.
Time now for the market analysis on this week's episode of the Trading Bell. Joining me is Samuel Gishohi from NIC Securities. And of course, he is one of our frequent analysts, and he's going to be breaking down the numbers for us this week. Thank you once again, Samuel, for joining us.
Thanks for having me.
Let's begin with our movers, and we're seeing a bit of an overlap with Kenya Ray Insurance Corporation. It's one of the biggest movers, and it's also one of the greatest losers.
Yes, they issued the profit warning. The profit was going to go down by more than 25%. That is usually a signal to the market. Usually, a company has to announce if the profit is going to go down by more than 25%, and that, of course, caused a massive sell-off. And so that explains the fact that it was a mover, and on top of that, again,
a loser, yeah.
A loser.
Yeah.
Yes.
Okay. And we're also seeing Kenya Airways. Now that percentage change is quite big. We're seeing a downward turn of 40.78%. Now, of course, I believe it's in line with the protests that were happening last week as well when it comes to Kenya Airways. Any other things that you think influenced this particular drop?
I do. I agree with you. I think we haven't had any corporate action from Kenya Airways. And I think the anticipation, of course, any bad news or any bad information about it, a lot of investors were expecting that deal to go through. And that, for them, was the reason they were buying into Kenya Airways, expecting that there was going to be a buyout or whatever was going to happen with the takeover. And when there's a takeover, there's a tendency to get given at some sort of premium for them, a sweetener for them to sell the shares. We've seen that with Ken Kobil recently. So I think that was the reason for the hype, the buying in. And when, of course, these issues started, then it becomes a deal breaker and people exit.
Okay, well, it'll be interesting to see how that plays out. But if we look at one of our gainers, that's interesting there, Safaricom Limited, and there's a change of about 8.32%. You were saying that that's interesting to note.
Well, we did see them go global with Fuliza,
Yes.
and that, of course, did cause the market to get excited about Safaricom. We are also approaching their year end. Their year end, Safaricom's year end is 31st of March. Now, as we approach the year end, the banks are finalizing their announcements. So then, focus is shifting to Safaricom, and I would expect by next week to start seeing Centum appearing on this list, because 31st is their year end. We're expecting them to announce in the next 2 months. Most investors, especially now that we have more sophisticated investors, they take their positions early. So they want to take positions in Safaricom so that as we approach the announcement, then the latecomers will be buying from them at a higher price.
A lot of thought clearly goes into, the movement here. And if we look at, you were saying some of the banks that are releasing their results. Of course, this week we saw Cooperative, we saw Diamond Trust Bank. What are some of the insights that you have for us with these particular institutions this week that came out with their results?
Well, one thing you'll notice is the banks have delayed quite a bit to make their announcements. We have seen an uptick in dividends, and that usually, we call it dividend signaling, that the banks want to tell the public things are okay. So because the profits are sort of flattening, they're also giving better dividends just to keep the investing public interested in their stocks.
Okay.
That said, one other thing to notice is there was a delay. Normally banks will announce early February, mid-February. Now we're seeing them announce very close to the deadline. They're really cutting it close. I mean, Equity has yet to announce. Apart from KCB and Barclays
and Standard,
yes, they've taken quite a bit of time to announce, which again is not very normal with the banks.
Okay.
But you'll notice that the increases, we're no longer seeing those big double-digit profits. I mean, Cooperative did 11.6%, NIC did 2.2%, and I think Diamond Trust did about 2.3%. So again, you can see that there's not that much gain in the profitability. Of course, there's that effect of, I think we have issues of provisions. IFRS 9 was coming in this year. Of course, it has been staggered, but at the end of the day, you will notice that all of these are affecting the results.
A lot of factors surrounding the banking industry, of course, right now.
Yes, we are hoping that there will be some more talk on this interest rate capping.
Yes.
Of course, not because the banks want to hurt the public, the borrowing public, but more because if we have a controlled interest rate regime, then it hurts the economy because the public is not accessing credit, and when the public is not accessing credit, our economy is going into a standstill. Very bad for our market. If you look at the volumes we're doing on the market, they're very low. We are rarely hitting 1 billion in a day, which should be the norm.
In fact, as you talk about that, let's look at that NSE 20 share index. We're seeing again this week a decline of 6.63%.
You would expect to see that every once in a while because markets don't move in a straight line.
Yeah.
So again, we have the random walk issue, which means there'll always be dips here and there. So after an announcement, we'll see an excitement, the market will go up. And then I think right now, we've just seen the Ekow bill, a lot of focus went there, which was not trading on the market. So now I would expect to start seeing a bit of an uptick next week as the funds from Ekow bill start being reinvested. I'm hoping most of them come back into the market. So again, you might see an uptick again as those funds hit the market.
And even as we wrap up the conversation on the market, something very interesting this week, the story about the Barclays Bank deposit box that was found with a lot of fake currency, a big amount there. As somebody who is very much well versed in the banking industry, what kind of measures do banks need to take in order to make sure that their safety deposit boxes are not filled with such things?
Well, I'm not the right person to really comment on that. I'm not a banker per se, I'm a broker, so I might not know very much about deposit boxes. What I don't really, I would like to understand is how that sort of amount got in there. So I'm waiting to
just the volume itself.
Yeah, that's huge. It's really huge.
All right. Well, that's it for our markets on this episode, but it's time now for Markets 101. All right, well, now we take a look at our question on the street or, of course, on Twitter. And Mariam, this time around, is asking, how does a company, get listed on the Nairobi Securities Exchange? So, Samuel, can you tell us that?
Thank you, Mariam, for the question. There are two ways of getting listed on the Nairobi Securities Exchange. One is by introduction, and the other is through an IPO, an initial public offer. Now, through introduction means that you're not raising any funds. We saw an example of that in Equity. When Equity came to the market, the company was not raising funds from the public. What they were doing is they were listing directly on the market. The other way is the IPO, which is an initial public offer, meaning you're raising money from the investing public, so they're buying into your company by buying shares on the market. There's a very long and a very intricate process involved. You have to have an investment bank which advises so that they can do the valuations, and then they have to go to Capital Markets Authority, which is the regulator of the market, and then they will check all the due diligence, check on all the disclosures that they need, which we can't really go into here. And once they have approved it, then that company can be listed at the Nairobi Securities Exchange. Usually listing is done right here, actually, and they will ring that bell that you saw being rung earlier when the company is listed. Thank you.
All right, well, Mariam, hopefully that answers your question. And it's time now for the NSE Historical Facts. Well, that's it for this episode of The Trading Bell. I do want to thank our analyst, that is Samuel Gishohi, once again for joining us.
You're welcome. Thanks for having me.
Okay, and we will catch you next time. Of course, you can keep up with us via the social media handles appearing on your screen. And this has been The Trading Bell with me, Maalika Kazia. Thank you for watching.